Most people think the wealthy are rich because they earn more money, get lucky, or come from privileged backgrounds. But the truth is far more calculated. Wealthy Americans follow a completely different set of money rules that are rarely taught in schools, not discussed at dinner tables, and definitely not shared publicly unless you're part of their world. These rules determine how they build wealth, protect it, grow it, and transfer it without losing a penny unnecessarily. And while the average American is trying to survive an unstable economy, the wealthy are silently playing a different game entirely. Today, I'm going to expose those hidden money rules that explain why some Americans get richer every year while others stay stuck. The first rule wealthy Americans live by is simple but incredibly powerful. Money flows to structure, not effort. Regular people work harder to earn more. Wealthy people build systems that make money even when they're asleep. They set up LLCs, holding companies, trusts, escrows, and investment structures that funnel money through them in strategic ways. They don't just make income, they build pipelines. And because their money is structured through businesses, they get tax benefits, deductions, and write-offs that normal employees can't even dream of. Where the average American pays taxes before they spend their money, wealthy Americans spend before they pay taxes. That alone changes the entire game. Another rule the wealthy follow is understanding that debt is not the enemy. Bad debt is. While most Americans fear debt, wealthy Americans use it as a tool. They use good debt like business loans, real estate leverage, and credit lines to acquire assets that pay them monthly. They use banks' money to make more money instead of using their own cash. And because they're buying profitable or appreciating assets, the debt ends up getting paid by renters, customers, or the asset's own cash flow. Meanwhile, many people fall into credit card debt or car loans that only drain money. The wealthy don't avoid debt. They avoid debt that doesn't make them richer. Then there's rule number 3. Never pay taxes on money more than once. Most people earn income, pay taxes, spend what's left, and repeat. The wealthy recycle their money in a loop. They use tax-protected accounts, cost segregation in real estate, depreciation, 1031 exchanges, charitable trusts, and life insurance-backed strategies to reduce taxable income. They reinvest gains instead of cashing out. They borrow against depreciating assets instead of selling those assets. Borrowed money isn't taxed, so they get cash without triggering taxes. This is why the wealthy can afford new investments, new properties, or expansions while paying much less in taxes than someone earning a fraction of their income. Another hidden rule is knowing that you don't save to get rich. Invest to get rich. Most people save money in a bank account that barely beats inflation. Wealthy Americans put their money to work. They invest in income-producing real estate, private equity, index funds, startups, oil and gas, and even insurance products that grow tax-free. Their money sits inside assets, not savings accounts. They understand that a dollar not invested is a dollar dying slowly. And because they own appreciating assets, every year they automatically get richer, even if they do nothing. Meanwhile, the average person saves for emergencies but has no long-term wealth strategy. One of the most secret rules wealthy Americans use is the money velocity rule. Money sitting still loses value. Money that moves through the right channels grows exponentially. Wealthy people never let money stay idle. A dollar earned gets reinvested, borrowed against, reinvested again, and cycled through business or investments multiple times. The same dollar may be used again and again. That's how they accelerate wealth far faster than someone simply saving or spending. Another rule the wealthy quietly follow is that assets must pay for liabilities. If they want a car, they buy an asset that pays for the car. If they want a vacation home, they buy a rental property whose cash flow covers the mortgage. Use passive income to pay for lifestyle upgrades, not active income. This is why they never feel financial pressure. Their luxuries are funded by investments, not salaries. Meanwhile, most Americans buy liabilities with hard-earned income and then struggle to keep up with the bills. The wealthy also understand the rule. Cash flow beats salary always. A salary stops when you stop working. Cash flow doesn't. Wealthy Americans build or buy cash-flowing assets, real estate, online businesses, royalties, dividends, automated systems, and investments that deliver predictable monthly returns. Even if their main business collapses, their cash flow keeps them alive. This is a luxury the average person never experiences because they re-stuck relying on one single source of income. Then comes one of the most misunderstood rules. Wealth is not built individually. It's built by networks. Wealthy Americans surround themselves with advisors, investors, entrepreneurs, deal makers, and people who pull them into new opportunities. They don't hang around people who drain their mindset. They join masterminds, clubs, private networks, and industry groups that give them access to deals before the public ever hears about them. The wealthy get information early, and early information builds wealth. This is why networking isn't optional, it's essential. Next is the rule the wealthy rely on to stay wealthy. Protect the downside. The upside will take care of itself. They don't gamble. They don't take blind risks. Every investment has a backup plan: insurance, tax protection, a legal structure, or risk mitigation. They diversify intelligently, not randomly. They buy assets with equity, cash flow, or appreciation potential. They never put themselves in a position where one failure wipes out their entire progress. Meanwhile, the average person takes emotional risks, buying high, selling low, chasing hype, and acting on trends instead of strategy. One of the most powerful hidden rules wealthy Americans use is the life insurance wealth loop. They use cash value life insurance policies, often called infinite banking, as a private bank. These policies grow tax-free, can be borrowed against tax-free, and transfer wealth tax-free. They deposit money, borrow against it to invest, let the money in the policy grow untouched, and repeat. When they die, the death benefit wipes out the loan and passes millions to their family without taxes. It's one of the most misunderstood but most effective wealth systems in America. Then there's the rule: your money must outlive you. Wealthy Americans plan decades ahead. They have trusts to protect assets, wills to direct wealth, and strategies to make sure future generations stay wealthy. They think in terms of multi-generational wealth, not month-to-month survival. Their goal isn't to retire at S, to create a legacy machine that continues growing long after they're gone. Because of that long-term mindset, they make smarter decisions in the present. Another hidden rule is don't chase money, chase value. Wealthy Americans create value so large that money naturally chases them. They build companies that solve problems, not companies that simply try to earn profits. They understand that the bigger the value they create, the bigger their income becomes. This mindset shift alone separates them from the average American who is constantly chasing small raises or temporary opportunities. And finally, the most important rule of all: wealth is a mindset before it's a bank balance. Wealthy Americans think differently about money. They don't see it as something to spend, they see it as something to multiply. They don't see challenges, they see opportunities. They don't fear risk, they manage it. They don't fear debt, they control it. They don't chase quick wins, they build long-term systems. Their mindset is built around growth, strategy, patience, and structure, and that mindset shapes everything they do. So here's the ultimate truth: success isn't about being born wealthy, it's about learning the rules the wealthy play by. The average American is stuck in a system that encourages consumption, debt, and taxes. But wealthy Americans use structures, strategies, and cash flow to break out of that system entirely. If you learn even a few of these hidden rules and begin applying them, your financial life will start shifting in ways you never imagined. Because the game of money is real, and the wealthy are winning because they're replaying by a different rule book. Now, the rule book is in your hands.